Adam talks about this in some of the training videos that we have. One of the major advantages of already having an LLC. So if you're on Schedule C, if your client's on Schedule C, and they form an LLC ahead of time, even while they're filing on Schedule C, they can do a late S corporation election. So backdate it to the beginning of the year, and they only have to, and then it will cover the entire year. So in other words, you can report the business income and expenses all on the S corporation return for that year. You can do a late election like Ronnie talked about, but if you don't have an LLC set up, let's say it's just a pure sole proprietorship, then you don't have an entity, you don't have an LLC that you can make that election on backwards. And at that point, you're basically you're starting a new entity, and you're going to have to split out the income and expenses between a Schedule C sole proprietorship, right, for part of the year, and then you're going to have to move that and create a separate tax return. So depending on the level of income and profit for the business over that sort of second half of the year, it can change all these numbers. So it gets a little bit trickier. It's a very good question. It's a very good thought. If someone already has an LLC, you guys, and that's one of the biggest reasons, if you see a client's income, Schedule C income starting to go up, yes, in California, LLCs cost $800 a year. Okay, nobody wants to pay an extra $800 a year. But when you already have that LLC set up, and then you see, oh, hey, this is the year the business is starting to take off, and you backdate that election, like Ronnie's talking about, then you run payroll before the end of the year to get your salary in, you can have a major tax savings, okay?